Okay, what a week, right? I mean, tech stocks, the darlings of the market, they finally cracked. We saw the major indices all slip into the red. Even Bitcoin, which, it seemed unstoppable, started to wobble. The only thing really holding firm was gold. And on top of all that, a government shutdown left us flying totally blind without that crucial jobs data. It is a lot to take in. So with all of this chaos, it's really easy to get lost in the noise, isn't it? But really, there's only one question that truly matters right now. What comes next? Well, in this explainer, I'm going to give you exactly that. A clear, 2-week playbook to help you navigate all this uncertainty. We're going to turn this chaos into a concrete plan. So let's get started. All right, here's how we're going to do it. First, we'll get a snapshot of the week in one picture. Then we'll dig into the 3 big forces driving the markets. After that, we'll talk about what actually changed. We'll get into this whole dream versus delivery thing. Then I'll hand you your 2-week playbook. And finally, we'll nail down the clear takeaway. Let's jump right in.
Okay, so first things first. Let's just look at the damage. I mean, this was a week where the market charts were just a sea of red.
The Nasdaq, it had its absolute worst week since April. It really led the whole market down. The S&P and the Dow, they also ended the week lower. It was pretty obvious where the pain was coming from, right? It was all concentrated in the tech sector.
So what was driving this sell-off? Well, it was this growing fear that the whole AI trade has just become, well, too crowded. Over-owned and over-loved, as they say. And you saw it in the big names. Tech giants like Nvidia and Tesla, the very stocks that have led this rally, they got hit particularly hard. And this sell-off, it's forcing investors to ask a really critical question. Is all this massive investment in AI actually going to deliver real profits anytime soon? And then sentiment just cratered. The University of Michigan Sentiment Index, it fell all the way down to 50.3. Now, to put that in perspective, that's the lowest it has been since 2022. That is signaling some real concern from consumers. And just to top it all off, the shutdown hit. No October jobs report, no revision for September's numbers. We were flying blind. The private layoff trackers, they were calling it the worst October for job cuts in over 20 years. You can just feel the tension, can't you? Weak sentiment, no official data, and the tech-heavy indices are on thin ice. So, how do we make any sense of this? The key is to separate the signal from all of this noise. And I'm going to break it down for you right now into 3 key market forces. Okay, force number 1, the AI valuation shell. The market just isn't buying the hype anymore. It's demanding proof of profits, real revenue. And this hit the big tech stocks hard. Force number 2, the data blackout. Pretty simple. With no official jobs report, fear just took over, and we saw volatility, the VIX, spike. And third, we saw these cross-asset signals. Basically, risky assets like Bitcoin pulled back, while safe havens like gold held strong. The takeaway? It's pretty clear. Investors were moving away from risk. Okay, so hold that picture of those 3 forces in your mind, because now we're going to look at what actually changed on a technical level and really get into why this pullback feels a little different this time. Check this out. For the first time in months, the S&P 500 actually closed below its 50-day moving average. This is what traders call a trend break, and it is a really significant signal. It basically suggests the market's upward momentum is weakening. Now, it's important to remember, a pullback like this can actually be healthy. It can let the market reset before its next potential move up. And you saw this uncertainty everywhere. Bitcoin's test of that big $100,000 level, it showed profit-taking is finally kicking in. Gold staying stable near 4,000? That tells you investors are looking for safety. And oil's weakness? That points to real concerns about global demand. So when you put it all together, what do you see? You see a market that is deeply, deeply uncertain about the future. So this all brings us to the real core tension in the market right now. The one question that absolutely everyone is asking. Is the AI era over before it even begins? No way. But the market? It's definitely switching its focus from the dream to demanding delivery. And what does that mean? It means the winners, from here on out, have to show actual product on the ground and real cash flow in the bank. It's a huge shift from valuing some future promise to rewarding current, tangible returns.
And this brings us to a really crucial point about how all markets work. I want you to remember this. Flow moves price. Fundamentals, keep it there. See, the AI narrative, the story, that created the initial momentum.
But now, for these sky-high valuations to stick, we absolutely need to see real, fundamental results.
So, the big question is, what do you do with all this information? Well, let's turn this analysis into action. Here is your 2-week playbook, a simple map to help you navigate this storm.
It's a 4-step plan. Step 1, respect the trend break. That means maybe reducing your position sizes, tightening up your risk management. Step 2, watch 3 key tells. And don't worry, I'll explain what those are in a second. Step 3, you've got to track those AI companies for proof of delivery. And step 4, use a cross-asset check to gauge what the market is really thinking.
Okay, so the first tell is something called credit spreads. All it is the yield gap between corporate bonds and safer government treasuries. Now, if this spread widens really fast, it's a huge red flag that risk appetite is falling off a cliff, is a powerful, kind of under-the-radar signal of stress in the whole financial system.
The second tell is the VIX term structure. Sounds complicated, but it's not. It's just the curve of expected volatility. If near-term fear, today's fear, spikes higher than longer-term calm, that's your signal to maybe wait for calmer seas before making any big moves. It tells you if the panic is right now or way off in the distance.
These tools, they're your new compass. And listen, a data blackout does not mean no signal. You just need a new compass. And that's what this playbook gives you. It gives you that new compass. All right, let's bring it all home. We started with a really messy week, right? We saw tech wobble, we saw sentiment sink. So what's the one thing you need to remember from all of this? What we're seeing right now, it's not a market that's breaking down. It's a market that's teaching us a lesson in discipline. It's shaking out the weak hands, and it's rewarding those who have a plan. And that brings me to the single most important takeaway. Hope is not a strategy. Process is. So here's your action plan. Respect the pullback. Follow your plan, and let proof, not promises, lead the way. Don't fall in love with the story. Fall in love with a solid process. Look, if you found this helpful, do me a favor. Subscribe, and maybe share it with someone who's feeling a little anxious about the markets right now. Thanks for your time, and I'll see you next time.